What's up, brother? How are you?
I am doing wonderful, dude. I've been excited to chat with you here. I know we've talked a few times, and what you do is very much so where I am looking to head and things that I'm interested in. So, been
Yeah.
super excited to get you on here, dude. Dive into
Well,
some things.
yeah, excited to hang out and be here. So,
Awesome, dude. Well, we're here now, so let's go ahead and dive into it, man. I guess first off, what I always do with everybody is just tell us a little bit about yourself as a person, your background before real estate, before any of the capital stuff that you're doing now. Like, tell us your backstory a bit.
yeah. Man, so it's been a journey, that's for sure. It started kind of my first step into entrepreneur journey was I was working oil field and wanted to make the jump into owning my own business. So um, hated the oil field. Money was great, but didn't love it. Prior to that, I'd worked in gyms and done that for
Here
some
we
time
go.
too, and just didn't ever really find my purpose. And opened up my first business with my brother. And we did that for 6 or 7 years. Moved back to Idaho and opened up, as you know, I have a couple pizza restaurants.
Yeah.
So those are drive-through pizza places that we started from scratch. Man, didn't know a thing about that world either. Didn't know a thing about food, how to make pizza, and jumped into that. And we've built that up. We're going on 7 years now, two locations, looking for a third.
Nice.
Um, just a really cool concept. But man, you want to talk about hard work? It was one of those things, and I'm thankful for it now, looking back at it, because had I not had it, I would never have gotten that second job at Amazon. So I was going to work at the restaurants during the day, 8 to 6, 7 o'clock at night, coming home, grabbing dinner. And then I would go to work at Amazon, and I'd work
Oh,
from
wow.
Amazon from 8 p.m. till 5, 6 a.m. And I did that for a long time. And what's funny is, just to keep me going, I was on my feet. So I never really got tired. I was constantly moving in there. And I
Yeah.
started listening to podcasts and stuff like that, and ran across Pace Morby, Sub Two, heard him on Bradley's podcast, and was like, okay, oh man, real estate, that's the way. That's how I'm gonna get out of this. And jumped into Sub Two, couldn't really afford it. Um, but I
Yeah.
did it. And my wife was pissed. It was one of those things. She's like, dude, you have a second job and you just spent this money. Like, what is happening with you? What is wrong? I'm like, I don't know. It's just, there's something about it. It's calling my name. And so jumped into it, and obviously learned about creative finance and what that looked like. And then from there, man, started doing Sub Two on cars. That's how I bought. We had bought a couple cars and started growing our Turo platform. I think I was running 7 cars at one point, so that was able to then kind of put the Amazon thing to the side, and did that. So that allowed a little bit more freedom, right? It was like all these things were stepping stones. Um,
Really.
and then started lending money out on real estate stuff. Nothing super crazy. Did some EMD deals. Did some money on some fix and flips. And as I learn about that world, that they don't always pan out how people say they're going to, right? So you're kind of stuck in the long game for that. Like, I still have some capital out on some deals, and it's one of those things, like, what I've learned though over time and being inside these rooms and these environments then led me to Everbridge, and my team that I have now with these guys, and created just a really unique opportunity, which then allowed me to basically shut the Turo off. I've pulled a lot of my money out of the real estate world, and it's now in with Everbridge, and kind of just making the money that way as a lender with our own company, which is really cool.
Yeah.
And that's where we're at. And now we do business acquisitions for people. So
That's quite a journey from making pizzas to business acquisitions. So,
yeah, yeah,
first off, you said no background in pizza or restaurants or food or anything. What
no,
what made you say, "Hey, I want to go start a pizza restaurant"?
uh, a buddy. it was literally, he was like, "Hey, I've got this idea. This is what I want
Cool.
to do." And he's like, "But you're the only person that I know that could run this thing." And I'm like, "All right, cool. Well, shit, I'll try it."
I'll
So
try.
so we literally, it was like one of those things. We moved back to Idaho, and then I spent 2 years inside my house making our dough recipes and sauce. And dude, I built a 220-volt extension cord that ran from my dryer plug-in inside my house, and it ran out into my garage and then would hook up to my pizza oven. So when I wanted to make pizzas, I would unplug the dryer, plug that guy in, and turn the oven on and and get it going. Yeah,
So
and just trial and error, man. Burnt pizzas, got pizzas stuck to the decks, and all sorts of stuff. But that's really what kind of spurred that opportunity. And then obviously, again, like I said, had I not done that, I wouldn't even be here.
yeah,
So it just
I
kind of one of
love
those
that.
stepping stones.
I love that vision that you're able to see there, kind of looking backwards. Like I was just telling somebody recently, there are no bad things. It was Bain actually. Yesterday, Bain spent the day in the car with me going down to Miami and back for an event. And like there are no bad things. There are only good things in the process, right? And so what might seem stressful, I got to work two jobs and this is hard. Now you can look back and see the opportunities that created for you. So I love that perspective. I think that's awesome. And I think
Yeah.
in telling that story, one of the points that I want to point out is that there was no excuses for you there. Like you kept doing the thing and you kept rolling forward, right? A lot of
Mhm.
people are like, "Oh, well, I can't do real estate because I work a full-time job, or I don't have enough time to do wholesaling well," or there's always an excuse on why they can't do something instead of just deciding that it has to happen and then continuing to push forward. I think that entrepreneurial drive, the bug that you get as an entrepreneur, it becomes your DNA. If you don't already have it, I was kind of
Mhm.
wired that way from the start. Some people learn that over time, but once you understand that, I think it continues to translate for more and more growth. So obviously it's
Yeah.
cool that you did that. You also mentioned, just kind of keep touching on some points that you mentioned there, was the sub two cars thing. We interviewed Mike Davis on here the other day. Had a lot of fun.
Love Mike.
Yeah. So I know you do the RVs and some similar like car stuff too, right?
I had done it. That was kind of like, again, it was one of those things where I had tried the wholesale thing. I didn't love it.
Yeah.
It just wasn't my thing. And I found this like really unique, I don't know, I just found I could make connections with people that were selling their cars and vehicle and RVs and all these other things really easily. So it became very easy for me to like pitch the idea like, "Hey, let me take over these payments, let me." And that's, I have a Ford Bronco. At one point we had a 4Runner, we had a Toyota Corolla Cross that way. There was a couple other things, and I've helped Mike do a couple deals. You
Cool.
know, RVs again, are done RVs. I had almost done a UTV as well. So that's the thing, is like you can do what I learned inside Sub 2 basically opened up my mind to what you actually can do.
Yes, bro.
So
100%.
yeah,
Same thing on me. I know we've talked quite a bit, and like I don't consider myself like a real estate guy like a lot of people in the space do. Like, yes, we're touching a
right.
whole lot of real estate right now, but like I'm not Pace, and I don't want to be Pace in that light. But what he unlocked for me, kind of what you just touched there, was like creative finance, and it's your ability to apply it to literally anything, right? Like if
Yep.
you can get somebody to say yes and feel like they got a good deal out of it, then you can run with it. Truthfully, there's obviously some barriers there from a legality perspective, but for the most part, if you can make both sides happy, you can put together any kind of deal you want to with creative finance. So that's definitely my biggest
Yeah.
takeaway from Sub Two. So I knew you were doing some of those things, so that's really cool. And so you did the
Yeah.
lending and stuff, and I know you kind of alluded a little bit to Everbridge there at the end, but I know this is your thing now, what you're doing, your primary
Yeah.
focus. So why don't you break that down a little bit deeper on what you guys do with Everbridge?
Yeah, yeah. So that was basically when I decided to turn off the faucet from the whole Sub 2 car RV thing. Like I said, I if I'll help Mike every now and then if he needs something. He helped me get rid of a couple RVs. But really the transition came when I had brought an opportunity to Everbridge, and this was prior to me coming in with them. And I said, "Hey, I've got this deal. I want to try and take this down." And it ended up not working out, but they were like, dude, why don't you come on with us as part of our business development person? And now I act as our loan broker. So I handle all the initial basically flow through what we do. So if somebody wants to buy a business, they get to see me first. I get to do a lot of the underwriting and really dive into these acquisitions. And what's cool is there's no one doing what we do. We do 100% financing. So we're literally the definition of zero down for people. So,
Mm.
it's funny. You think about creative finance in that sense, we are, other than you still have to be approved, right? And we can't go fund anyone, but we are very specific with what we do, and we help clients really understand businesses. I mean, you and I have talked multiple times about different deals, and I'm like, I don't like that one, or there's something I see about this, or whatever it is, right? And that's my job at Everbridge, is to really kind of be that filter to get us the best possible deals to the finish line. We only want to do good deals, right? We want the best deals to come to us.
Yeah.
And that allows our product to be really powerful as well, because we're almost protecting the borrowers in that sense, right? Is you bring me a deal and it's not good, I'm going to tell you, hey, this doesn't look good, or this is what's happening. You bring me a
Yeah.
strong deal, I'm going to want to put you in that deal because it's going to put you in the best position when we exit. So, and how our product works, which again, 100% financing, we bring in the acquisition. Typically, we're going to close way faster than you would going to get an SBA loan. And then what we do is we actually bridge our product, our or the acquisition to an SBA loan. So
Mm.
typically within 4 to 6 months, we're going to then move you over from our loan into an SBA refinance at that point. So you still get the SBA for long-term play, but we're just acting as that kind of initial, capital injection and being able to close quickly on stuff.
Did my camera disappear here, or is it just on
You,
my side?
no, you did. You're
Oh, what
gone.
was
You're
that?
black.
What happened here?
Uh,
Always got the technical difficulties.
now
Can't
it's
wait
just
to
your
have my office
face.
set up back to normal, man, and my life will be easier then. Let's see if this wants to work for us now here.
Let's say you're always
Yeah.
traveling. Where are you at
Oh
now?
man. Well, I'm finally down in St. Pete again. We
Okay.
were out in Washington and doing all kinds of crazy stuff for February, building some cool stuff. And this is why I was actually interested in talking to you a lot, because we are doing quite a few mergers and lower level acquisitions internally with deal makers, and how we're
Yeah.
growing by basically acquiring companies that can facilitate our scale. So I knew this business acquisitions was going to be a good conversation. That's why I wanted to get some of my other guys on here as well, because I know like Zach and the team, we talk quite a bit about this. So let's dig into business acquisitions a little bit. So I know you said your job is
Yeah.
to find what's a good deal and what's not a good deal. Well, let's talk about that. What for you at first defines a good deal? What are you guys looking to acquire in a business?
So really, when we're looking at acquisitions, right? When a client brings me something, the biggest thing that we have a business financial checklist, which I think I've sent to you in the past, but
Yeah.
it's very simple things that we want to look at. We want to look at the last 3 years of the P&Ls. We want to see last 3 years of tax returns. We want to see last 3 years of balance sheets. Typically, if there's any, we want to see if there's any debt attached to the business or what that debt schedule looks like. And then ideally for us, any year-to-date items, right? So the P&Ls and profit loss, and then your tax returns. And for us, especially for me, your P&L may look phenomenal, right? And it may be look like a really great business, but if we go to dig into that business, really the only thing that matters is that tax return, because that's what's being reported to the
Yeah.
government, right? So you could tell me on paper that it's worth here based on this P&L, but if I see over here on this tax return it's way different, that's
Yeah.
what this is valued off of, right? And so really when you're looking at that is comparing the two. Does your P&L and your tax return, do they mirror each other, right? And they're not going to be identical, because there's going to be some stuff that's plugged away in some different areas of the tax return. But they're going to be close. You're going to be able to kind of dig through that and find those. So ideally when you're looking at that, again, you want to see that mirror of each other. and you want to see them pretty close. And you want to see that consistently over 3 years, especially as a lender for us. And this goes for any lender. You start seeing P&Ls that are all over the place and your tax returns don't match, you might don't even think about taking it to a lender because
Yeah.
they'll sit here and turn around and go, nope, nope, not interested. The other thing that's really kind of that initial like thing for me is those are what I look at right away, right? And then I'll look at what has been the financial path of that business. What does that look like? Has it been consistent? If I see businesses that are kind of doing the, the flow, you're dipping a little bit, you're coming up, you're dipping a little bit, you're coming up. That's consistency. Typically, what that tells me is that that owner is comfortable. He's
Yeah.
there, he's making it work, and he's been around for a while, right? So I know that that is probably a healthy business. A typical borrower is going to be able to come in and step into that acquisition and plug himself right into that chair and kind of continue that pattern, right? And then their goal is to grow it. The other thing I want to look at is it growing? If it's growing, that's even better, right? Growing's even better than it kind of flowing. Um, but for me, those are kind of some of the main things that we look at because the rest of it we can figure out. Then when you're looking at these acquisitions, all those passes, right? Everything mirrors. It's got good, consistent financials. We look at our margins. What do those look like? And typically, I'm going to know kind of what margin should be at for different industries, right? Real healthy businesses, you're going to see 20 to 30% margins. Average ones, you're going to see that 15 to 20%. And then you're going to see some other ones that are in the 8 to 12% range. And those are still doable, but they're not quite as, you know, the appetite for those aren't quite as beneficial for us. But obviously, as long as really what that end game will come down to is your debt service ratio. So you're obviously familiar with DSCR loans and what that looks like, but it's a very similar concept for business acquisitions, right? If you've got a $1.2 million price point and the cash flow is, call it less than even 100,000, that's not realistic. It can't even
Right.
afford it.
Right.
Like I've looked at some, what was it? It was a laundromat or a dry cleaner service or something like that. And it was like 1.8 million and cash flow was like 189,000 or something like that. Very low. Um, couldn't debt service. It wouldn't even work. So, and that's really what you're looking at. If all the other stuff lines up, you'll kind of know what type of deal you're getting at that point. SBA is going to fund acquisitions at a 1.25 debt service ratio. We typically, and this just shows like how particular we are about our products and about what type of acquisitions we'll fund. We want to see at minimum 1.5,
Mm.
ideally anything 1.75 or higher for our debt service ratio. Um, that allows just a really strong position for our exit lenders as well, right? Because they know that we're bringing the best of the best to the table for them. So then it's no problem for them to get those off the table for us. So that's really some of the things again that you're going to want to look at when you're diving into these.
Yeah, man. I know a few of the ones, like the opportunities that we've talked about. One of the biggest things that we run into is, the few that came to us mostly came through talking to sellers that just happened to also own this other thing. And so, like, a lot of people don't keep books. They don't know how to actually run a business. They have a job that they're their own boss, but they don't really have a business. And this is something we, encountered a little bit. And a few of the questions here talk about how do you what was the question here? How do you what was her question here? How do you decide whether to keep existing management? How is the fastest way to improve profitability after acquisition? There's a question here I saw a second. I can't find it off the top here, but basically, when we're looking at a business, we have to be able to show paperwork, as you talked about there. Most people
Yeah.
don't. How do you, or how have you seen others work with a seller that maybe doesn't have that yet to position to be able to go a route like this?
So those are the type of deals that I would consider your creative finance options, right?
Right.
You're going to create either a position of, hey, we're going to bring in what do you have that seller lacks in that
Mhm.
on that side, because that's not going to be fundable by a normal by a normal lender, right? So that's where creative comes into play. So in a scenario like that, consulting for equity, right? What can you come in? What can you provide? What kind of value can you bring to that acquisition to let that seller know, here's the game plan, here's what we're going to do over the next 8 to 12 months to get this business into the right position? Because right now, if you're writing stuff on paper, it's not worth anything. It is worth what that seller is willing to negotiate with
Yeah.
you. They're the bank at that point, and that's their only option. So that those would be the scenarios where, like, when we run across businesses that are on this downward trend, they're skyrocketing to the ground. I'm like,
Mm.
that's a seller finance deal.
Yeah.
Go raise some private money, go bring in a down payment and build that business back up. Those are not the type of deals that I ever recommend people go after unless you've got some sort of experience in that
Mhm.
world, right? And even for us, like when it comes to acquisitions, that's why our due diligence, even on our borrowers, is very specific. We want to see a 700 plus credit score. We want to see some sort of uh, on your resume, we want to see something that's going to show us that you know how to run that acquisition, right? I don't want to see a construction guy coming in and going, man, I found this e-commerce business and I want to buy this thing. I'm like, oh yeah, okay, cool. So do you know how to run an e-commerce business? Well, no, but it can't be that hard. It's a lot harder than you think if you don't know anything about it. Um,
Interesting.
so so same concept, that I would tell somebody that if you do see a business that's on that kind of that spiral downhill, unless you know how to fix it, it's not worth chasing. And that's the sad part, is there are a lot of those deals out there and they're
Yeah.
salvageable by some people, right? Like if you know what you're doing, you could build anything back up, but you've got to know what you're doing. Otherwise, you're gonna put that business in the same position it was already going. So
You're just going to take on somebody else's burden. You're going to feel the pain of the other seller. You're just going to take it for.
yeah,
Yeah, I definitely could get that. So
yeah.
you guys are lending, but you're also, are you doing consulting for equity? Like what is, I guess, do you have either direction? It's a specific model. Do you do a little bit of both? Like what's your,
We are strictly a lender. So that is our bread and butter. So I don't know if you saw my post in sub two. We just closed on 1.2 million in acquisitions
Mhm.
just in February, which takes our portfolio just up over, I think it's like 2.5 or 2.3 million. And we just released our product back in October.
Yeah.
So we've had some really great success, which obviously if you're telling anybody, 100% on an acquisition, I
Great.
mean, who's going to say no? We've actually had clients who will stop the SBA process and come with us to then go down our route because it makes more sense, right? If we're providing up to 100% financing,
Yeah.
why go SBA, right? And that's what makes our product so powerful. And on the opposite side of that, we do co-lending. So people that maybe you're not a person that wants to go out and go buy rentals and be a landlord, or you don't want to go buy a business. With the co-lending thing, we're a lending business in a box for people, right? So if you
I
don't
like
know
it.
what so if you don't know a ton about gator lending, transactional lending, PML, any of that stuff, we kind of hold that process and hold that hand. You're utilizing us to basically go through this entire process and partner with us in the sense on these acquisitions. And what's cool is people can earn 1.5% a month returns on their capital. So 18% a year. I mean, it's pretty powerful for you to not have to go be a landlord, right? You think about now, don't get me wrong, plenty of benefits in the real estate world, so not bashing on that by any means.
Yeah.
But for somebody that doesn't know what they're doing, right? You go buy a home to cash flow $300-400, even 500. The amount of money that you put in on that, you could have put in as a lender with us and made double. So
I
it's
like
pretty cool. So those are the two things that we do.
So, do you have a specific, let's say, buy box or like lending box that you types of businesses that you guys like to work with? Because I know one of the things about our community is that we generate leads, we talk to people, oops, we create
Yeah.
opportunity. So if there's a specific buy box or lending box, maybe we could find something that we can do together.
Yeah. So for us, obviously with SBA being our exit lender, we try to follow those guidelines pretty closely. So that's ideally that's kind of where we want to stick is basically anything in that SBA box. You're gonna laugh, but there's a couple things we won't touch. One is restaurants. Hey,
Okay.
we stay away from those.
The pizza guy. The
I
pizza
know,
guy
I
said no
know.
restaurants.
No restaurants. We won't touch hotels, retail, unless you've got something that's super strong. We won't touch that. Solar. Um,
We don't want to do with solar. We're like
yeah,
not doing that. We're out of there.
yeah. So those are kind of some of the main things that we're just like, nope. People bring them to us, and we won't touch. So it's and again, if somebody has maybe some experience in the restaurant world, I would consider it, right? If I've got somebody that brings me an acquisition and they've got 20 years in the restaurant world managing restaurants and they bring me something that's got really good margins, I'm not going to say no to that, right? Because they probably know what they're going to do. But again, you bring me a pizza restaurant and you have no experience in running that business, more than likely I'm gonna tread that water pretty lightly and I'll browse, but I'm not gonna say, hey, yeah, we'll jump in on it. So
I mean, yeah, that's I feel like that's pretty self-explanatory. Like I'm not gonna go buy a car shop because I don't know shit about the car, you know? So like
right,
why would I
right.
want to go acquire a company that I don't know how to run? It doesn't seem like it sets you up for success. So that makes plenty of sense. You know, I was at the Aspire event yesterday down in Miami, and Cody Sanchez
Yeah,
spoke there. You know, so like this whole business acquisition theme has been on my mind, and so it's really what my I guess you could say long term goals or passion is. Like what we're doing here, growing this business is basically for fun. Like this is what I love to do. This is we got all these awesome people around that help facilitate the growth of this. But really, my long term life goals have always been to just literally acquire businesses and or be early stage investor in businesses and help them grow. So I
yeah.
really like the acquisition stuff. So tell us about one that you've done recently or a cool one that you're proud of that comes to mind.
Man, there's a couple. I mean, I really I think a lot as you know for me, I mean, I try to really build those relationships with clients, right? And so it's not I can't say that I have a favorite, just in case they ever see this, but I mean, I build these relationships with these clients so that I know that they'll come back. Right when they're ready to do another one. So for me, wouldn't even say that it was like something that really stood out, but I always go back to this because it was one of our first, it was maybe our second one we had done when we first released our product. And it was for a couple guys out in Florida. They wanted to go buy a cabinet business. And this is one of those ones where did they really have the experience in that world? No, but the systems and processes were there in that business and it was healthy and owners were willing to stay on for a period of time to train them and these borrowers were good borrowers, backgrounds were clean. They were willing to put in, this is also what's really cool is they were willing to put in money as a lender with us against
Mm,
their own acquisition. So
cool.
instead of going SBA and putting that 10 or 20% down and it disappearing until you receive it back right through the cash flow of the business, you didn't make anything off of it. They come in, they lend against their own acquisition. They already know it's going to cash flow. They know that basically they're putting their own capital in to ensure that it's going to be safe. So it's kind of a win-win for them where they were able to actually take that 1.5% a month in on a return, and then they'll continue to roll it in with us and help
Cool.
other entrepreneurs. So just a
Love it.
really cool story with them. And man, I actually just I got a text from them the other day. I was gonna see if I could find it, but they were shooting me pictures of their cabinet company, and they were like, "Oh, look at this! We're doing this one for this. I think it was a hospital, and we've got this one coming on, and we're going to be ready in 6 months for another. We want to try and buy another cabinet company that's up north a little bit more, and convert it into a rainbow cabinet as well. So they're already thinking expansion and growing, and so that for me, that was just really cool to see two guys that didn't have any sort of background in this world. They weren't entrepreneurs. They had 9 to 5 jobs, take this risk and jump in and then just kill it. Like,
That's
and
awesome.
that's what's so cool is seeing stuff like that, right? Is like these guys, they're never late on their payments to us. I mean, it's like, and they communicate with us and they're very like, hey, if you guys are ever out this way, we'd love to see you, you know. I mean, just things like that. So building those relationships are really cool. And try not to get too attached to them because when you have to tell people no, it's tough
Yeah,
sometimes, right? But
yeah,
it's more about protection when we do say no than anything. So
definitely. You mentioned a couple times the SBA box, right? And I kind of know a little bit what that means based off our conversation. But for those
yeah.
that are listening, let's define a little bit more what that might look like as far as a good business that would fit in a box. Because a lot of just the point, a lot of the things are really almost all of the things that you're saying are going to be the same kind of things that any lender in this in comparable role is going to be looking for. So tell us a little bit more about what the SBA box actually looks like in a business that would qualify in that way.
Um, we're probably a little more strict than SBA as far as what we'll do. So
Okay.
typically, if you were going to go to SBA, SBA is going to fund almost any type of deal as long as it will debt service above that or at that 1.25 debt service cover ratio. So their box is it's pretty wide open, right? And as long as you've got a decent credit score, you've got a decent resume, they're going to pretty much be able to qualify you when it comes to SBA. They won't turn away restaurants. They won't turn away, hotels. I mean, is again, if you qualify, they'll fund you. So SBA basically has a limit of up to 5 million. So that's your box that you get to play in, is up to that 5 million. So for us, the way we make money is with our origination fees built into our loans. So I wouldn't say that you could come bring me a deal that's 5 million because then I have no room to attach our fees in there so that we can get paid. So really, I would say for us, we won't bring any more than about 1.5 million in per acquisition. And that just allows us to diversify our funds a little bit better with multiple acquisitions rather than you bringing me a deal and it's 4 million and I've got 4 million in on one. I can spread
Mm.
that out over the course of three, right? So um, just makes a little bit more sense for us. But outside of that, SBA, like I said, up to 5 million. And then that debt service cover ratio is at that 1.25. So, and when you really think about what that is, 1.25 is not much. I mean, it's very little cash flow coming to your bank account at a 1.25. So
Very low. Very low.
SBA has very low standards, I should say.
I mean, and they're trying to help people get the business small.
Yes.
And that's what their
Yeah.
goal is. But
Yeah.
also, I understand that as well. So, let's say right now we talk to a seller and they have a car wash or a laundromat, right? And
Yeah.
these numbers and what is the minimum credit requirements and like I know part of it was the background check and stuff like that. So unfortunately, your boy's not going to make it there, but like some people might, So as for the community that's listening, and this is why, guys, I'll side note, collaboration and partnership is great because people like Tara
Yep.
and many others do qualify for those things. So tell us a little bit if somebody's listening, like what do they need to meet as far as a borrower to qualify for your programs as well?
Yeah. So for us, 700 plus credit score. And there's a little wiggle room in there, but ideally that's really where we want to start. That just shows one, somebody's willing to take care of what they have already, right? So we know that more than likely they're going to show responsibility when it comes to the business. Um, Outside of that, we don't want to see any sort of bankruptcies. That's a red flag for us. Now, that's not saying that SBA will finance people that have bankruptcies. It's just for us and how our product works. We won't do that. We're very strict. Felonies is another one of those things where we stay clear of as well. Anything that can cause any sort of hiccup in our refinance,
Mhm.
and that's where we're like, nope, can't do it. But again, like you said, there's ways around that, right? So building those relationships and having those partnerships with people, um, those are situations that come into play and people need. So outside of that, it's really we're going to do a personal financial statement on you. We want to see, again, your Experian credit report, your resume. How much do you know about this business? Have you had any experience managing staff, managing people? Any experience in this industry, right? So those are things that we look at. Now, there's obviously some ways around that, and again, if that resume stands out, then you could take down different types of deals. But those are some of the main things that we really look for when it comes to acquisitions and kind of the backgrounds on borrowers. Again, like I said, SBA, there's a lot more leeway on that side. So if you want to go that route, you more than likely can get funded for a lot of different things with SBA. The only difference is with our product, again, we're looking for very, very powerful, very specific businesses that are strong, that are healthy, and strong borrowers, right? So that's, again, 100% financing, strong
Right.
borrowers, strong business. Those are the things that all come into play, right? So if we're going to bring 100% of the acquisition cost, plus we bring working capital to the table, we want to make sure that somebody's going to be able to actually manage that properly.
Absolutely. So I asked those questions because several people in the community have asked me or brought me opportunities where they're like, "Hey, I want to acquire this, or I want to look at this opportunity." So it's good for them to understand what that qualification looks like, because I really think that the 100% financing is very unique. I don't.
Mhm.
Um, it's obviously with the SBA, it's easier in some ways to get approved, but you're gonna have to have some skin in the game. You're gonna have to have some money to play with. You're gonna have to be able to play a little bit different game. And I like that you guys allow, especially for a qualified buyer, to be able to get 100% financing. Like it sounds like a win-win to me. I mean, you guys get to make money on lending. They get to get in without the hefty upfront costs, and everybody makes money as it grows. So I think that's really cool. I know you said you don't
Yeah.
do the consulting stuff, but once you land with somebody, do you at all help facilitate their growth, or like how does it? What is your? I know that you mentioned the one business that you just referred to that kind of checks in with you and maintains a relationship that way, but like, what does an ongoing relationship look like for you outside of just collecting the check from somebody that you guys lend to? Like, is there any other like collaboration beyond that point?
Um, I think it's not even so much, it's really just maintain, it's more of like we're doing our job as a lender, ensuring that the business is still profitable, right? Because we have this very short window of time to ensure that that refinance happens, right? And again, that's why we won't touch the restaurants and a lot of the hospitality stuff, because you can run those into the ground like that.
Yeah.
So you can literally unplug something and it will be dead. And trying to get that refi, and then we're stuck with the bag, right? So that's why we're very specific with what we do, because we want to make sure that everything's protected. Once the refinance happens, it's outside of, like, unless they're bringing us another deal that they want to roll up to their current acquisition, that's really like we're kind of hands off at that point, right? Initially with the acquisition, where it's monthly check-ins, just checking in on P&Ls. What's the revenue looking like? What are they actually, so with our working capital too, you don't just get a chunk of working capital when you close on this acquisition. We hold it back, and then you would put it in as a request, as like a line of credit in that sense. So we would say, hey, okay, what do you need this 20,000 for? And if it's typically, something that makes sense for the business, then obviously funds get wired and they go do that. And then they submit their receipts and all that good stuff. So it's really a close relationship. And again, because we're still working through the steps to get them refinanced, we have to maintain that white glove service that whole time until refi happens, because last thing we want to do is get stuck with an acquisition that then we have to figure out how do we how do these guys get out of this now? So
The reason why I asked that question, and one of the reasons why I had my partner Zach and some of the other guys jump on here, is because as we've looked at business acquisitions in the future, right? Obviously, I try to timeline things out and know that when we want to do certain things. We are looking currently more and more down the capital route of lending right now on real estate, right? But I
yeah.
see a huge opportunity of basically a blending of both of these, of like lending the money, but also consulting. A lot of what I want to do, and Zach knows this, is like I want to go to early stage startups that are either doing well and need faster or larger growth scalability, or aren't doing so great and need to be turned around. And I want to basically come in and be CEO for a brief period of time, bring in Zach and the operational side of what we have and like turn businesses around, but put our money into it at the same time. So not just
Yeah.
lending, but also coming in to like make sure, because I know that we know how to grow businesses. I know that we know how to build the systems that can fix anything, to your point that you said earlier. Like if you know what you're doing, you can do it. So like I see an opportunity for us in the future of that blended opportunity. I don't know if that's like other people out there doing it in that way. I know Hormozy, of course, like will take the chunk of the business and help in a similar way. But that's just kind of the style or opportunity that I've seen a lot. So I was just interested. I see we got a hand raised here. Darius, I've been waiting for you. I've been waiting for you, Darius. I see you got some questions.
Uh-huh.
What's up,
No,
man?
and you may have already said it, but what is your minimum loan amount and what is your maximum that you guys are doing?
Great question. So minimum, typically we want to see around 350 to 500,000. 350 is kind of one of those things like, if we get it and it makes sense, we'll throw it in. Ideally, we want to stay around 500.
Okay.
And then like I was saying earlier, up to about 1.5 million is kind of that cap.
Okay.
Now that's not saying that you have to go find a business under 1.5. If you find something at 3, what we'll do is bring 1.5 to the table, but it's up to you to get the rest structured, because when
Okay.
we refi out, right, with SBA, you have that 5 million to utilize. So there's a gap there, right? So if we bring 1.5, seller carries until a refinance hits, refi hits, then they can get another liquidity hit to get them out the rest of the way. So
Okay.
there's ways around it. We can get creative, and that's what's, again, our product, there's nothing like it on the market, and that's what allows us to be really successful. And our team, which I saw Bain ask if I know Ryan McDermott. He's our CEO.
Ah,
Ryan's he's our main man. He's awesome. I love that dude. Straight New York too. Like he'll straight up tell you how it is. I'm
Yeah.
nice when it comes to acquisitions and letting people know, like, hey, unfortunately, and he's just straight up like, dude, this is ugly. Get this thing out of here. Like, so, but
that's
he's
Yeah. He
awesome.
tells it how it is. Yeah.
Yeah, yeah. And I think that's what makes our team so powerful and great is, so there's Ryan McDermott. He handles a lot of our capital markets. Russell Digert, he's our chief lending officer. He's actually out here in Idaho with me. That dude's a genius when it comes to understanding that the loan side and documents and the lending side of stuff. Like he could he could write a book if he really wanted to sit down and do it. Just a very smart guy. And then we've got Darren Yee. I don't know if any of you guys know him. He does a lot of Gator Zooms. He's been in that world for a long time. He's exited multiple businesses for multiple figures. And so him and I work hand in hand when it comes to the acquisition side. So I'm kind of, again, that first filter. And then what if I like it, it goes to Darren. Darren and I walk through it. And then we get a file ready for our SBA lender from there. So it's just the four of us that run it. And man, it's a great little
I
team
love it.
that we put together. So
Is it is it a fund that you guys are lending out of here, or is it
so
personal?
we're private equity, and I can't I can't speak on it a ton because I'll get in trouble by Ryan. Um, on basically, we're allowed to say certain things and how our stuff's structured. So I can't speak to it a ton. That would be a question that you could dive in with Ryan, and he'll be able to figure out
Well,
how to
sometime
say
I would
it.
love to
So
connect with Ryan. He sounds like my kind of guy. I'm pretty straight to it. Zach is the nice guy on our team that will tell him a little bit softer, and I'm like, yo, get this shit right. Let's make it happen. So I
yeah,
can
yeah.
relate to that dynamic.
Uh,
That's cool. Well, awesome. Well, so what's next for you, man? As we approach kind of the tail end of this, what's y'all's goals? First, actually, one more question before I ask you that, because I meant to ask
yeah.
a second ago. How long have you guys been together as a team doing this?
So this goes back to originally when I came in. Darren and Ryan they came up with this thesis, right? So they built what Everbridge is and what we do. So
Cool.
they've been in the background building this thing out for probably, geez, the last year and a half ish. I came in, Ryan asked me to come in with them probably about a year ago. to come in on the business acquisition side and be our loan broker. So that's kind of where I came in. So it's been almost a year now with them, and the company's been well over a year. Prior to this, we were Ever Vested, and then we changed the name basically based on knowing that, hey, this is what we're going to focus on is bridge loans. So
Nice. So now I'll ask the question, what is the future for you guys as you're now blended together? You've got a very solid team. You're actively doing this. Like, what's your goals? What can we see coming next for you guys?
man, to just fund businesses like that's I always make the joke of like how much I wanted to do, right? And I set a goal for us to do 20 million this year.
Oh, yeah.
Is ideal. And we'll see where we're landing, where we're, I would say, in the pipeline right now. We have over 5 million kind of laid out in front of us. So
Nice.
it's definitely possible. We're just kind of working through, we're still learning and growing and changing things. Like, there's a lot of stuff that now I do instead of meeting with clients going forward. I started recording videos, and we'll have like a little basically like it'll be a website that it won't be accessible unless I send the link. People will be able to go in, put their information in, watch video one. Hey, this is what we do. This is how it works. Here's what you have to be qualified. If they go to step two. Then there will be documents that they'll have. They can download those, fill all those out. And then if they're ready beyond that and they have all the files that are in those requested documents, then they'll reach out to us and say, hey, I've taken all the steps. All this is ready to go. I want to see if this deal's fundable for you guys. And then we'll reach out and start that. So that'll help streamline my process a lot, because like today, I've been on the phone calls every 30 minutes since 8 a.m. nonstop. So I had enough time to run downstairs real quick and grab some food and chug some water before this. But I mean, that's how it is, right? You know how the hustle is. So that was my goal, is to build more systems
Yeah.
out so that I don't have to be on calls constantly, and it'll help weed out who's really serious, right? If you want 100% financing, you got to go watch a 4-minute video and then decide, are you fundable? If you are, then you watch a 2.5-minute video. And then after that, you spend the next hour or two putting the files together for me so that I can just go, cool, underwrite it. Yep, it looks good. Goes to Darren, and from there. So for
There you go.
us, again, kind of streamlining our processes as we move forward and really just growing this thing. So
Well, I think that we're going to have a little fun with this. I'm going to figure out how we can build some targeted lead generation for these kind of businesses. And the community member that comes to my mind is Cam Englehart, who I know would love to partner on a business acquisition. And I also know Cam Englehart would qualify for all of the things that we do, but I cannot. So I think that we'll have some fun trying to find something that we can acquire to add to that 20 million goal for you, brother. So I'm excited to see you guys
yeah,
be able to knock that down, man. But I appreciate you spending time with us and sharing some game on how we can potentially qualify for the private equity that you guys are lending and helping people acquire businesses. I know specifically Darius McPike has already talked to me about acquiring a business, so I know my man's going to be in your inbox if he's not already, trying to make that happen. Anything,
absolutely.
words that you would like to share with us as we tie it up here, man?
No, I think that's it. I think there's definitely some potential for some collaboration as we move forward. And kind of going off of what you were saying, right, is some of that lead generation. What's really cool is this is what we're actually working on setting up with certain brokerages as well, and brokers, is going out and saying, hey, we'll underwrite these deals, right? We'll pre-approve them. And then guess what? Now you have a pre-approval on this business. All you got to do is find a buyer at that
Mm.
point. So
We're definitely gonna have to meet again one-on-one to talk about some training stuff, brother. So I appreciate that. I look forward to doing some deals together and making some things happen, man. So thank you for spending time with us. Everybody else out there, let's go keep making deals and get these things done. I got some more to sign tonight, so let's make it happen, guys.
there you
Yo,
go.
see y'all.
All right, later.
Bye.